Okay, everyone, welcome. I'm going to go through a lot of different stock charts that I look at. We're going to just kind of run through them all. It's a light trading week this week, so again, you're going to get a lot of false breakdowns and false breakouts. It's not the best week to be trading, and for the most part, I don't do a lot of trading this week. I just am putting out this video so that anybody who is trading can potentially see what's going on in the charts. And there's still possibility for big movement. Last year this time we had a huge crash, or maybe that was 2 years ago. We had a big down move in December. Yeah, that was back in 2018 actually. So there's possibility for big moves. I just want to point out what I'm seeing. Let's get right into it. Give me a thumbs up if you guys find value. All right, so Nasdaq futures, this level right here seems to be the level the market keeps whipping around on, 12,675 about. You can see that they broke down here yesterday, gave a breakdown, and then it recovered that and has really been chopping around that since. So, and there's also this downtrend line that we've started to create here on the Nasdaq futures, something like that. So I'm just watching really those two levels. I think we're going to break lower, but again, maybe it doesn't happen this week. The trading is, it's light and it's inconsistent. So there doesn't seem to be any real follow through to any moves. So keep an eye on that. SPY futures, yeah, so we've got this uptrend line here, and you can see they did this little false breakdown and have since recovered it, and it's just holding there. So look for, if it's going to hold, it's probably just going to grind around in this area for the remaining of the week, or will break to the downside. As of right now, there's nothing going on, so you just have to kind of wait for something. Here's your small cap futures, RTY. You can see this bearish rising wedge here. We had a breakdown, but it obviously was a false breakdown. Again, this is the light week, so it's, you'll see things like this where you get these false breakdowns. So, again, if they're going to hold it here, then we're probably just going to grind around. I wouldn't really be interested in taking any kind of long position for the remaining of the week. I'd really more be interested in looking for an opportunity to short. But again, you need that sell signal and that breakdown of the trend line. We just don't have that. So until you get that, for me, I just kind of sit on my hands. IWM, and this is basically what you're looking for, is some sort of a breakdown. Now that we might get it. We might get it today or tomorrow. But again, you had the breakdown the other day and they recovered it so far. They make it look like a recovery, and it is a recovery of that broken trend line right there. Now, if you get the break again, and especially if it's impulsive, then it's likely to be the real deal. A lot of the mania has been in the small caps. There's a lot of these small kind of COVID names. I mean, there's several of them, but most of them have just gone parabolic, kind of straight up, and that's where the mania is at. So I think when that starts to unwind, because that's a momentum trade, people are buying things because it's going higher, not because of valuation, not because of fundamentals. They're just buying it because everyone else is buying it, hoping that they can sell it at a higher price, and that works until it doesn't. And when that momentum runs off, you're likely to see the small caps sell off quite a bit. So I am definitely interested in a short of the IWM, possibly more than the triple Qs, because of the triple Qs has the monsters of tech. It's got the FANG stocks. It's got the big FANG companies that aren't going to just unwind in an instant. They might sell off over time, but they're quality names. So when they sell off, it's usually based on valuation, but they're still quality cash flow kings. So they're not going to see a massive flight to safety out of those names, even though they obviously have the potential to sell off. Okay, triple Qs here. It's just basically right now. This is a back test basically of this broken trend at 309.40. This was, we broke down right there, came back, have been doing a back test. You can say they popped it above it a little bit. And again, expect this kind of stuff during this week. That, you're not going to get a clean read on trend lines. And, if you break above it, you can break back below it. Because the trading's so light, it's going to chop through these trend lines this week. So keep an eye on that. But as of right now, we're back testing this trend line. We haven't broke above it again. So it's resistance until proven otherwise. And if that's true, then I think we continue to the downside. So watch for some sort of continued selling over the next few days to the downside. Same with SPY. Going back to SPY, you can see here's the uptrend line that this thing's been in for a while. This trend line goes back to November. And you can see, we had a breakdown. So that was a sell signal yesterday. And when I pointed that out, the video, I said, look, there's a sell signal. But obviously, they're going to whip it around and try to shake people out. All we've done, though, as of right now, is we're back testing this trend line. Yesterday, they recovered it. It's since failed. So, again, expect it to be whippy through here a little bit. You get some chop, where it's kind of tricking people and it just leaves you undecisive on which way it's going to go. But, this was an impulsive breakdown. If you look at the moves that's taken place, this was the most impulsive move recently. And then, pretty impulsive buying as well. But we're back right below resistance. So, again, I can't, you could short it here. It is a back test. It's a light trading week, so it's hard to know if it's going to recover and, make another leg higher. I can't really tell. But, again, it could go down just as easily as it could go up. So, I'm just, for me, I'm just kind of keeping it light and just waiting for a little bit more proof or, some sort of impulsive breakdown to let me know that there's more downside. Okay, another thing to keep an eye on is the long-term Treasury bonds. You can see here we've got clean and clear bullish divergence in TLT. And this thing doesn't move a lot, so you have to kind of load up on it in order to get, any kind of a profit on it. But bullish divergence, we've been kind of inching lower, making new lows, while momentum has been moving higher. So, when I see this kind of stuff, this tells me that bonds are going to break to the upside. That's what this momentum's telling me. And I'm kind of waiting for that buy signal or that impulsive break higher, and it's likely set up to come on a breakdown in the stock market. That's basically, bonds usually move up, money flows into bonds when the markets break down. And so that's what this tells me. It tells me that bonds want to break up because of the momentum, and likely the stock market's breaking down at the same time. So that's what I see here. Just nothing's triggered yet, so it's just kind of a setup. Gold. Okay, I'm kind of questioning gold right now. I think there might be some lower prices coming. And so what I'm starting to do as of this video is really lighten up on my Barrett gold position. I'm still interested in it for the long term because I think gold is setting up for another leg higher, but there's possibly some lower prices in the near future. So here's what I see on gold. You've got this downtrend line right here on gold. We broke to the upside once, and it was a false breakout, and then we sold all the way down to the major support of 1790, and then we're breaking again. But again, the breakout's happening this week on this light. Well, it happened on Friday actually, but this light trading week, and so I'm not sold that this breakout is the real deal. It doesn't look impulsive enough for a breakout. Typically on a breakout, you don't want to see just one little green candle and then it starts to sell off. Usually you're going to see an impulsive breakout and then it could come down for a big back test, but you want to see that impulsive breakout. We're not seeing that. So I don't know. I think the probability is this possibly fails. This is another false breakout. And if this is, you're going to probably see pretty impulsive selling right down to the bottom of this channel, which is, down here basically. And maybe we come down to the 1740 or something. If we do that pretty impulsively, we'll then have that bullish divergence that I've been looking for. The thing about gold that also I don't like is the fact that, one, we don't have impulsive buying, so the breakout is not impulsive. And so that's one indicator that I'm not a fan of. Two, there's no bullish divergence. It's just momentum has been up, price has been up. What I prefer to see is price moving down while momentum is moving up. That's the indication that a trend reversal is coming. So we don't have that. We don't have that indication yet. So if gold does sell off impulsively, then we'll probably get something like this, start setting up a bullish divergence on the daily chart, and that will start to knock out a kind of a bottom basically in gold. So that's kind of where I'm sitting right now. I'm gonna lighten up on my bear gold. I've already done so. Let's look at, well, we can look at the dollar. The dollar here. So again, the other thing is the dollar bullish divergence. So you've got bullish divergence here in the dollar. You've got a bullish falling wedge. See the wedge right here? We're making a low and right there. And so this is a bullish setup. Even though the dollar's been moving lower, it's set up. The momentum is telling me that it's likely to move higher. Look at the PPO here. We're starting to get that bullish crossover right there on the PPO. So the dollar looks like it, and let me go back to the PPO real quick. See the histogram right there, green? So we're starting to get a bullish crossover in the PPO. We have bullish divergence, and we would look for price to break to the upside. If you go to the hourly, we probably can tighten this up a little bit. Yeah, we have. No, I'm going to leave it right there. But it does look like the dollar is set up to move higher, and if the dollar moves higher, that's probably going to be bearish for gold. So again, these are things that I've been watching, and if the dollar moves higher, let's say we break this trend line right here, we get an impulsive breakout, we're probably heading straight up to this green line, which is on the weekly, the longer term resistance line now. This goes back to 2011, several reactions. We got 3 right there. That was another one. So we could break to the upside and do a back test of this trend line. And if the dollar's doing that, then the market is likely selling off, and gold is probably selling off as well. So the things that I'm starting to do just in anticipation of this dollar breakout, I'm lightening up on my gold trade, and I'm also lightening up. I sold my coffee position, my Joe here. The thing that I don't like about Joe is you go here to the daily, and you'll see negative divergence. See how the momentum's been moving lower, and yet we made a new high right here, a divergent high. I don't like that. So if I'm bullish something, I don't want to have negative divergence. I want to, when I see that, that tells me that the trend is likely, there's likely to be a trend reversal. So possibly what happens here in Joe, and it doesn't have to, this obviously could break higher, but if the dollar breaks higher, then I think it's likely that Joe sells off, and we probably come all the way down to this 32.40 area. So I'd be interested in buying it right down here at this 32.40, buying it back. But that's what I'm starting to do. So those are some positions and moves I've been making today. Okay, so FedEx here continuing lower. So this was all priced into the chart. We had negative divergence. Now the price is starting to sell off. Next level of support right there at 259. Likely to get a reaction there. And if you break that, then I think we're probably heading straight down to 183, about 184. GM here, this one continues to sell off. I like this to continue to sell off down to this trend line, down around 36, 37 bucks. This is the uptrend line. We kind of got ahead of ourselves, and now it's selling off. So I think it looks good to come down to this more major trend line, likely to get a reaction there. Tesla. All right, so obviously Tesla, they're trying to hold support today, which is, expected. There it is. I've got my trend line marked at about 624.62. Looks like today they sold it off, undercut it a little, and now it's trying to hold. So I don't expect it to go anywhere. But that's the thing. This thing is probably going to gap down. It's not going to sell off and give everyone an opportunity to get out. When you get the big decisive move to the downside, it's probably going to come in the form of a gap and trap, a lot of this bullish money all right here. So I could easily see us gapping down to, maybe this 550 area, 570, somewhere right around there, and then impulsively sell down right down to about 462. So that's kind of what I'm watching for. I'm short this. I like it. I'm going to continue to stay short. It's not going anywhere. It's just kind of chopping around a little bit. So I think it's likely this sells off. You look at the daily here. We have negative divergence. Big negative daily divergence right there. This whole huge move to the upside, basically, I think it's mostly been based on the S&P 500 inclusion. It has been divergent price action. So that is good. And then if you tighten it up, you can also see shorter time frame, which this would show up on the hourly. We have negative divergence right there. So this was a divergent high. So momentum's really falling off. Look at the PPO here. We had that bearish crossover. There. We did a little back test where it kind of just kissed that line, and then it's selling off. So I like it to the downside. I think this thing's gotten way ahead of itself. Again, this is a crazy stock, so take it at your own risk. And everything in my channel, everything on this video is just my opinion. Nothing's trading advice. These are just ideas, but I'm not giving any advice on anything. Okay, here's the short I took today. Peloton. This thing is one of those COVID stocks that has gotten way ahead of itself. And this is what I was looking for. So I'm expecting it to turn down here. So I do need to see, there needs to be a little bit more work done. But I am expecting it to turn down. And here's what I've got on it. We have this is a daily chart. There's this uptrend line right here. You can see from the March lows, reaction there. Lots of reactions right through here. Then we had a reaction there, and we finally broke. And when we broke, it was with a gap down. So when you're gapping below trend lines, that helps validate that trend line. So we gap below it, and we had no back test of that broken trend line until today. So you can see I saw this thing ramping up the last few days, and so I was looking for it to run up to this resistance line. And what they did today is they gapped it pretty much above it, and they've held it up there all day. I suspect by the end of the day, this thing is back below resistance or right on resistance, basically closing right on it, keeping us guessing. But I think this is the area that I want to be short at. The thing that I like about it also, now if it does turn down and it doesn't anytime soon, we will have that negative divergence on the daily. So this is something we've never had in this Peloton throughout this whole uptrend. Even when it broke, there was no negative divergence showing up. So there was nothing saying, okay, we're going to get a trend reversal, it's going to break. We never had that in the momentum indicators. Now, if it turns down, we do have that, and it's doing it on a potential back test. Now, could this hold and ramp up? Sure, of course it could, because this is a crazy stock as well. And these mania stocks, some people just buy until they're proven wrong. Basically, they just buy and buy and buy, and then they wake up one morning and it's gapped on them, and they take big losses, and that's just how these things work. So is this the break of the momentum? The bulls don't think so today, clearly, because the thing's up 10%. So the bulls are raging. They think everything's great. This is, they're buying, everything's great. I see it a little bit differently. I think if we turn down, then we've got negative divergence. We're right there at resistance, and this is a objective area to short. Looking at the PPO here, obviously it's pointed straight up. So the momentum is up. We don't have any confirmation on a negative divergence. And looking at the RSI, it has not turned down yet. So there's negative divergence. It's not confirmed in any way. So higher risk trade, of course. And so plan accordingly on that. And I could see this kind of hanging in here, maybe just kind of grinding a little bit higher over the next few days and then breaking. That might happen as well. NEO here. Let's look at the hourly. So this is the trend line that I pointed out in my video. I said, okay, I covered my trade. I'm looking to reshort this thing right up here about 48.30. And I did that and overshot it a little bit, but we're back below. So again, I think this is our resistance. This is likely to hold. We probably have an uptrend, a little trend line right here. We can make it out kind of. It's not the cleanest, but maybe a short-term trend line, something like that. But again, we've broken, so I think we had lower in Neo. Neo, Neo will likely go with Tesla. When Tesla falls, all these solar stocks are going to fall. That's kind of what I'm seeing. And these solar stocks are just raging. I mean, they are just euphoric, ripping like straight up to the upside. And Tesla's kind of the king of that. So when Tesla goes, the others are likely to go with it. Here's Zillow Group, another short that I do like. I do expect us to turn down where we're at now. But you can see here on the daily chart, you have an uptrend line right there. We broke trend back here in October. We had one back test and a series of back tests. So that's all we've been doing is just back testing the broken trend. If you look at the daily, we still have negative divergence. There it is. Let me zoom it in. You can see it's basically an equal high. We didn't make a higher, slightly lower high, not by much, but that's divergence because you made a new higher high in price and an equal or lower high in momentum. PPO here has not made a bearish crossover, so it's not confirmed. So I'm looking for prices to turn down here. Can they gap it up and do a quick little ramp and then roll over? Sure, that would be a stop raid. And that would, look for those kind of moves. The market makers like to do that. If you're near something and everybody expects, okay, this is resistance, this is very short, then the next day they pop it up, run everybody's stops, and then sell it off. Intel here still looks weak, but I could see it. I can see them filling this gap right here. So watch for that. That's likely. You can see the PPO on the hourly starting to make a bullish crossover. So they're likely going to move it up and fill the gap. It could even do a full back test of this trend line. But bigger picture, kind of longer term, if we go to the weekly, Intel still broke its bull market trend. So this is going back to 2009. Here's your bull market. There's your break of trend, back test, and failure and rollover. So I'd expect over the coming weeks that we continue to the downside. That's what this tells me. And so, yeah, I'm looking for that. And you did have on the weekly negative divergence. Here it is right there. So this price action right up here was a divergent high, and that's the highest price that we've seen in Intel. And it's pretty much sold off since. So at this point, momentum's to the downside over the bigger picture, and the price action is as well. Carvana here ramping up to the upside. This is kind of expected basically because we are in a really thin trading week where the institutional traders are not really participating in this market. That's why you get the Santa Claus rally, because for the most part, it's just retail traders who are on vacation and they're buying. Retail traders for the most part are bullish at the tops of markets and they're bearish at the bottoms. And so when you get kind of this, only the retail trade is trading, and that's why the market is so thin this week. They just have a tendency to buy. And what are they going to buy? Well, they're likely to buy these mania stocks, the mania stocks that have been working and that they've been buying. They are likely to continue to buy those till they don't work. So you see the ramp up in Carvana. What am I going to do with this? I've been short. So I'm not so sure. I might start to reduce my position size as trades start going against you. I like to reduce position as they go against me, and I like to add to a position as they start working for me. So what I'm likely to do is maybe start reducing a little bit. Let this thing do its, whatever kind of ramp this is going to be. If there's any continuation to this, let it kind of do its thing, and then wait for the breakdown back below this 269, 270 level. That likely will be the big breakdown move of this stock, and we're likely to fill the gap all the way down here at 174 and probably head down to this 125 area. So that's likely what I'm going to do on this one. Draftkings here. So we got an uptrend line here on the hourly chart. We broke trend, backtest one, and then they tried to do another backtest. It's failed basically since. So looks like this thing's heading lower. If we go to the daily, you can see big negative divergence right there. And the The negative divergence really, it's not divergent anymore. Here's your negative divergence where the momentum made a lower high and price had made a new higher high. We then got the reaction, but you can see this negative momentum is just extending. So we're continuing to make lower highs in the momentum. And also if you look at this is a divergent high right there. So we have negative divergence again, where we made a new higher high right here, and the momentum has made an equal or lower high. So I think we're likely to see another move down on Draftkings, likely to go down to a 35.40. And, I think ultimately we're going to break. You can see the 200-day moving average is coming in right here too. So we might get checked at that 200-day moving average for a reaction. Nvidia, I am short this one as well. And basically, what do we have? Well, we've just got sideways action. Nothing's going on. However, when you have a big move to the upside and stocks get, excessive, they don't typically correct sideways. Usually corrections need to take place in price. So, yes, they can stall out and go sideways for a little bit. But I still think this is going to head lower. What do I see in this one? Well, negative divergence, still intact. The momentum has pretty much just dropped off a cliff. And, we'll see what, we're just waiting for the catalyst, basically. This thing's just sideways. There's a catalyst coming. We don't know what it is, but it's likely going to play out. And I think it's going to play out to the downside because the momentum has been dropping off, and yet price just hasn't done anything. So likely you're going to get a catalyst and you're going to get a big gap down or a big impulsive move down. And then that's kind of like when everyone realizes, oh, this is going to sell off. But the thing is, it already has when you get that catalyst. So Walmart, we are getting a sell signal. It's just I just don't like sell signals this week. And I'm not seeing the volume there on the daily. So I don't see a daily breakdown volume. Here's your uptrend line in Walmart right there. And you can see we were drifting, and now we've got kind of an impulsive breakdown on the daily chart. But again, not my favorite because it's taking place this week on light volume. I might need to kind of see further price action in order to confirm this one. Here's another one, Uber. I'm not in this trade right now. I didn't take any position on this. I did short it the other day, and it sold off down to this support level about 50.26. Covered it down there, and I was looking at reshorting it back here at 52.44. The thing that I didn't like about it yesterday was this big green candle was a bullish engulfing candle. So you can see here, big bullish engulfing where it engulfed all these bearish candles, the past three at least. And then, so typically bullish engulfing, you look for confirmation or a confirming candle, and that's what we're getting today. So I'm just watching this one. Where does it go? Well, I think it could easily run up to and back test this trend line up around 56. So a little bit higher. There's a lot of other trades out there that are set up a little bit better than this. And I can only watch so much. So I'll probably just let this one, I'll keep an eye on it. I'm not actively looking to trade it though. And again, this is that light volume. This is that, happening this week. This is likely to be faded. Whatever move you see this week is likely to be faded at some point next year or maybe next week. So watch for that, watch for volume to come in. First Solar, again, I'm not in this one, but I just want to point out what I see. The reason why I didn't like this one is this thing is false breakdown city. So here's your uptrend line from March, and you can see had a breakdown here, they recovered it. Kept ramping up, had a breakdown here, they recovered it. Again, had a breakdown here, they recovered it. That's 3 false breakdowns. So it's a tricky one. And the RSI now, so this is not negative divergence. It's now burned through that. Let's see if we still have any kind of negative divergence. A little bit of negative divergence still right there. So again, there is negative divergence, but everything's pointed up. The momentum's, the RSI is pointed up. The PPO had a bullish crossover. It's pointed up. So this could easily burn through this negative divergence, which would be bullish in the short term at least. So we'll watch this. There's nothing, I'm not trading this one, just keeping an eye on it. Redfin here has gone parabolic. There's no sell signals. You can see the RSI right here on the daily chart is sitting around 90, which is the highest in its history. Now, it doesn't have that big of a history. It goes back to 2017. But again, this thing's the most overbought it's ever been. And, the price action has pretty much just been straight up. You can see, though, look at the date, look at the volume, how the volume's really been dropping off. So that's a volume divergence. You can see here, volume has just been dropping off and price is moving higher. So it's moving higher on thinner and thinner volume. I think, this one is likely to come back down to earth at some point in time, but there's no sell signals, no negative divergences on the daily. If we narrow it down to the hourly, they'll probably show up first on the hourly, and there they are. So there's a negative divergence there on the hourly, where you can see we're making a new high, and yet the price is starting to diverge. But again, hourly is not the best signal. The daily is a much more firm signal to give you a trend trade. And I don't know. It's hard to say whether we'll get one on the daily or what's going to go on. So I'm going to just continue to watch this. We also have this trend line right here that this thing is likely to come down and tag. So what might happen on this is if you go to the daily here, we might come down sharply, tag that trend line, bounce impulsively up, and put in that negative divergence on the daily. And then at that point, that would be a divergent high, and then we're likely to break for a big impulsive move to the downside. But again, this thing's just straight to the moon as of right now, so I'm not stepping in front of it until I see a trade firm up a little bit better. I wouldn't buy this and chase it if you haven't already been in it, and I wouldn't short it yet because there's no signals. Another one of these ones that just goes straight up, Chewy. And you can see here, this is the short-term line that I've got. It's not the cleanest because I only have 2 data points, so I don't trust it that firmly. But we're starting to break. Likely where I think we had is back down to this trend line down here, around 89, 90 bucks, 87, depending on when we get there. And then we'll see what happens. Let's look at the daily. No negative divergence. It actually burned through it. So right there, it is no longer valid. So again, same deal. It might sell off down to this trend line. We get an impulsive kickback rally. They bid it up, and then we put in that negative divergence on the daily. And that's really all I got, guys. So thank you. Everyone have happy holidays. And if nothing really happens tomorrow, then I'm likely to not put out a video because the market's pretty thin. There's not a whole lot going on. So I'll probably just take tomorrow off, and I'll catch you guys back after the holidays. So thank